What's up, millennials? In exchange for your time and hopefully a like as well, today we are going to take a look at the valuation of Lightning eMotors. And this is an EV company that is going to be acquired by a SPAC under the name GigCapital, or at least a SPAC GigCapital that is trading under the ticker symbol GIK. Before we start though, a few things first. First of all, I have not done extensive research about this company. Today we're only going to take a look at the valuation of Lightning eMotors according to the company themselves and also according to the SPAC that is going to acquire them. Secondly, don't trust me, verify me. I am just a random dude on the internet. I could be completely wrong. I'm just documenting my journey here. Third, Stock O'Clock. These are very short 1-minute videos that I post every single trading day with news about the stock market. And lastly, if you want to support this channel for free, the best thing you can do is to leave a comment, which is usually the best option for the YouTube algorithm. This SPAC and this company were actually suggested by multiple people in the comment section, one of them being Jason's Kitchen. He's got an interesting channel, by the way. I just looked at it and there are some interesting recipes on there. But he was actually thinking, or he was actually asking me what I thought about GIK Lightning eMotors. So that's what we are going to talk about today. And I'm not going to do a very long introduction of this company because likely if you click this video, you likely already know the company, but they do have different solutions, various solutions. They have some commercial electric vehicles, they do analytics, they do charging solutions, and they also do financing. We, however, are simply going to dive into the valuation of this company. And we are going to use the investor presentation for that. First of all, you can see that they're using a base share price of $10, which is basically the standard for all these SPACs. So that's what I put in my Excel sheet. Then they are going to have 82.315 million shares outstanding after the merger. So that gives us a market cap of $823 million. And apart from that, they're going to have $172.5 million in cash on their balance sheet. So if we take the market cap and we subtract the amount of net cash, we're going to arrive at an enterprise value of around $650 million, right? The thing is that if we go into TradingView to check the latest price, we can see that the latest price right now pre-market is $14.56. So that's what I put in my Excel sheet as well. And that means that the market cap has gone up a little bit to $1.2 billion, which makes the enterprise value a little bit more than $1 billion. Now, with regards to the future enterprise valuation, GigCapital and Lightning eMotors already helped us out a little, and actually they provided two different valuation methods. Today we're going to take a look at both of those valuation methods. First, we're going to take a look at the valuation based on a comparison with other big EV and auto tech companies. And if we scroll up a little bit, we can see that they compare themselves with companies like Workhorse, Tesla, XPeng, NIO, Plug Power, Ballard, Nvidia, and Xilinx. And as you can see in the investor presentation, the median revenue multiple of these companies is 15.87, right? So then GigCapital and Lightning eMotors say, okay, well, maybe we don't deserve a revenue multiple of 15.87x, but let's take a multiple of 6 to 8x instead to give ourselves a little discount, right? And for this valuation, they are going to use the future predicted revenue numbers from 2024. As we can see over here, the future expected revenue of 2024 is $1.165 billion. So if we pull up a calculator, we are going to use that number, $1.165 billion. And first we're going to multiply that by the low revenue multiple that we just saw of 6x, just like they did in their investor presentation. And that is going to give us a low future valuation of $6.99 billion. It's also the number that I put in my Excel sheet over here, as you can see. And then they say, okay, for the high valuation, we're going to take the exact same revenue of 2024, 1.165, and we're going to multiply that by 8 to get a high valuation of $9.32 billion, more or less the same as the investor presentation. So that's also the number that I put in my Excel sheet over here. And if you then go into my Excel sheet, you will see that the average between these numbers, so basically a midpoint valuation, would be $8.15 billion. But that's the future valuation, right? We want to know the current valuation. So how do they do that? Well, they take the future valuation and they apply a certain formula to get at a discounted enterprise value. Okay, so let's do that ourselves as well. We need two things for this. We need an amount of time, an amount of years to discount it back. And we saw that they used revenue numbers of 2024. So if we go back in time to 2021, that means that we have to discount it back 3 years in time, right? We also need a so-called discount rate. And in this investor presentation, we can see that they used a discount rate of 20%. So that's the discount rate that we are going to use as well. So let's first do this calculation for the low valuation of this company. $6.99 million, as we have seen in the previous step, right? For the low valuation of Lightning eMotors. And we are going to apply a formula, which goes like this. First, we divide it by 1.2, the 2 here standing for the discount rate of 20% rather. And we're going to do that to the power of 3 because of those 3 years that we need to discount it back from 2024 back to 2021, right? And that is going to give us a number of $4.045 billion, which is actually slightly different from the number that is mentioned in the investor presentation. So I'm not entirely sure how they got to this number instead of the number in my calculator, because yeah, this is the normal method to actually calculate this. So there might be a slight error in the investor presentation, or maybe I'm doing something wrong myself. Of course, that's also very possible. But yeah, in any case, I think that the discounted enterprise value would be 4.045, which is also the valuation that my Excel sheet is calculating for me. And the high valuation would then be, well, take the exact same method, 9.319 for the high valuation, the future high valuation, right here in the investor presentation as well. We're going to apply the same formula. So divided by 1.2 because of the discount rate of 20% to the power of 3 because of those 3 years. And that is going to give us a discounted high valuation of 5.392 basically, which is again slightly different from the number in the investor presentation. So again, I'm not entirely sure how they got to that price. But we are going to stick to the number that's given by our calculator and also by our Excel sheet of 5.392. And those two numbers, so the 4 million valuation and the 5.4 million valuation, is going to give us a midpoint enterprise valuation of about $4.7 billion. Now, to arrive at a fair market cap and a fair price per share, the only thing that we need to do is to take these discounted enterprise values, so these numbers that we've put over here in the Excel sheet, and we need to add the amount of net cash that we have talked about in the beginning of this video, which, if you recall, was $172.5 million. So then we would arrive at a low fair market cap of $4.2 billion, a high fair market cap of about 5.6 billion, and a midpoint fair market cap of about $4.9 billion. Then, if you recall, we are going to have 82 million shares outstanding, more or less. So then we simply need to take the market cap divided by the amount of outstanding shares, and then we're going to arrive at a fair price per share. If you do that for the low valuation, so 4.2 divided by 82 million shares, gives you a low valuation of $51.24. A high valuation would reach a valuation of $67.61, and a midpoint valuation would be $59.42. But remember that they actually gave us two valuation methods. We have now looked at the comparison between Lightning eMotors and other major EV and auto tech companies, right? But they also compared themselves with other comparable SPACs in this space. And they looked at SPACs like ChargePoint, Canoe, Nikola, Romeo, Excel Fleet, Arrival, Hyliion, Lion Electric, Lordstown, and Fisker. They said, okay, the median multiple for the 2024 revenue for these SPACs is 1.43, all right? So those SPACs were trading at 1.43 earnings of 2024, right? And just a little side note over here, these numbers are based on their research as of December 9th. So it's likely that these numbers have already changed a little, right? And as you can see, the 1.43 is quite a bit lower than the previous revenue multiples that we have used for our calculation, right? So what they say is, okay, based on this multiple of 1.43, let's give ourselves a multiple between 1x and 2x, right? To reach an implied enterprise value. So they said, all right, our revenue in 2024 is going to be $1.165 billion. So 1x is, of course, still the same, $1.165 billion. And 2x is, of course, exactly double, so $2.33 billion, right? So if you look at those numbers and then you look at the midpoint valuation, you would reach a midpoint enterprise valuation of $1.7 billion. Well, if you then add back the amount of net cash, you're going to arrive at a low fair market cap of 1.3 billion, high of 2.5 billion, and a midpoint of 1.9 billion. And if you then calculate it back to the price per share based on the amount of outstanding shares after the merger, the low valuation would be $16.25, high valuation $30.40, and the midpoint valuation $23.33. Now, as you can see, there's a very big difference between this valuation method and the other valuation method that we have just been using, right? Now, if you just want my personal opinion, I think these multiples, the 1 and 2x, are very low multiples. And the thing is that they also look at SPACs that were announced recently. And I actually believe that some of those SPACs like Lion Electric and Canoe still have quite some potential upside, right? Because they are not as known just yet. So that means that the multiples would likely become higher over time, right? So that means that the fair valuation of Lightning eMotors would also become higher as well. And again, if you want my personal opinion, I think the valuation compared to SPACs seems a little bit on the low end, but the valuation compared to the EV, the big EV and auto tech companies might be slightly on the high end. But I wouldn't be surprised if we did actually hit those valuations based on the comparison with other major EV and auto tech companies. Alright, so in this video we looked at a range of fair valuations for Lightning eMotors based on a comparison between this company and other similar SPACs, but also based on a comparison with this company and other major auto tech and EV companies, right? And even though there was quite a big difference between these two valuation methods, we do see that in each of those methods, Lightning eMotors is very likely undervalued at this moment. Before you leave, a few things first. First of all, I would like to know your opinion about the valuation of this company. Will this be a little bit more compared to the SPACs, or will this be a little bit more compared to the major auto tech and EV companies? Secondly, don't trust me, verify me. Just a random dude on the internet. This is not financial advice. I'm just documenting my journey. And the last thing, assumptions. We have taken a look at certain revenue multiples, and we have taken a look at predicted revenue numbers that were predicted by the SPAC and Lightning eMotors, right? So if one of these numbers change, the entire calculation is going to change as well, and the fair price per share is going to change as well. Alright, with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Happy holidays. Bye-bye.